So Gareth, you also said that we might see the Fed or central governments, central banks in general, come back in and stimulate again. So do you think that we end up getting another wave of inflation once we see that?
I do think it's going to be a tough battle to fight. And I think we have to look at how the trend has been, right? So we've been under trend of inflation for many, many years, which then usually means to get back to the medium or the mean, we have to have a multiple period of years above that goal of 2%. And I think that's what we're going to see. But having said that, that would generally indicate the Fed would be unlikely to stimulate. I would argue that in the beginning, for the next few years, the Fed will be really hesitant to print any money or lower interest rates because inflation is going to be sticky north of 2%. Whether it's 3, whether it's 4, I'm not sure. But they're going to be not wanting to trigger the inflation bug again. However, let's say 5 years out, we find ourselves in this protracted, this long recession that's borderline depression. There will be a point where it gets so bad, they will have to go back to that, what they do best, which is printing money to stimulate growth.
The cryptocurrency market underwent a relief rally over the past week after positive consumer price index and inflation data. The impact of reducing inflation saw Bitcoin and Ethereum surge toward key levels despite the market's volatility. However, the rally was short-lived, with the two leading cryptocurrencies by market capitalization having reversed the gains. At the moment, the inflation data and slowed down interest rate hikes are not helping the two leading cryptocurrencies, as both bears and bulls are fighting to gain market control. Hello and welcome to Money Talks. In today's video, Gareth Soloway shares his outlook about cryptocurrencies, gold, Fed rate hikes, and inflation data.
Yeah, so I do, and I'm a huge fan, and I've been a huge fan since basically the all-time highs of saying we need regulation in the space. More so just because you need transparency. I'm an investor, so I want, there's idealists who don't want any sort of involvement with the government in crypto. I understand that. But at the same time, if you want crypto to go up, and if you want Bitcoin to hit 100,000, 200, 250, 500, you have to have big money in there. And FTX ruined it. You could argue that Terra Luna, Celsius, Voyager, they were on that same path. But big money is not coming close in a million years to crypto again until there's transparency, until you have legitimate audit. You want the big four auditing firms to do audits, then you'll start seeing some realization that money can flow in there. So I think that's going to be one of the key things that actually puts a bottom in for crypto. I do have it priced in. I still think Bitcoin goes lower. 9,000-ish is what I'm looking at right now. I think that is achieved by May or June of 2023. And then I think you're going to start to see a flip with regulation. People and investors, and this will even be myself, if I'm looking at stocks and I'm saying, okay, these companies are going to earn less and less because we're in this long recession and the consumer's not spending as much. Well, where do I put my money? Well, now Bitcoin starts to look attractive. You got the transparency. It's become the digital gold. Maybe that's where I put some of my money. And I think a lot of other big firms will go that route.
Bitcoin price started an upside correction from the $16,250 zone. Bitcoin managed to recover a few points and was able to settle above the $16,600 level. There was a clear move above the $16,800 resistance and the 100-hourly simple moving average. The price even attempted an increase above the $17,000 resistance, but the bears were active. A high was formed near $17,067, and the price is consolidating in a range.
So I remember at one point in 2022, you told me that your pick for this year was gold, versus, let's say, the dollar or the broad indices. So what is your pick for 2023?
So this is kind of, it's getting a little trickier. Last year, it was a no-brainer, right? Because Bitcoin was trading, way too high. The S&P was still near, basically at all-time highs. So that was the easy pick last year for gold. This year, it's going to be gold again, but it's getting a little trickier because I do think Bitcoin bottoms this year and has a bounce. I just think that it won't have a significant enough bounce this year to overtake the gains in gold. And I still have it priced in like gold should blow through its 2020 and 2022 highs of around 2070s to 80 this year. So we're looking at some major upside. I think 2,300 is a pretty solid target price on gold for this year. And again, the beauty of it is history is a great telltale repeater. And if you go to that mid to late 70s period, the chart is almost identical to what we're seeing in gold right now. You had this kind of mid 70s sideways to down chop like we've seen for the last 2 years in gold. And then you had the big breakout. It actually came in kind of the late 70s and gold 10x'd. So I don't think gold 10x's this time because obviously Bitcoin will take some money away from that. But I do think it's going to be probably, in the next few years, you could be looking at a 3x on gold.
Mm-hmm.
Yeah, and I'm kind of in that camp. And I think there will be areas of the world that don't get hit as badly. I think some of the emerging markets, whether it's China or South America, they could hold up a little bit better. Their economies, you could argue by looking at their charts of their main indices, they've actually been consolidating now for 14 years. You haven't had new all-time highs. I mean, speaking of what I just said about the US markets maybe not making highs for 10 to 15 years, those markets haven't made new all-time highs in 14 years. And so I think there's certain pockets where money will rotate out of the US, but I think the US is now on a downturn that will last a very long time. It will likely spread to the European Union, the UK, and maybe even Japan to some extent, although depending on their policies, maybe not. But ultimately, I do think that it's going to be something that is mostly global between the big powers.
The main hurdle seems to be forming near the $17,200 and $17,250 levels. A clear move above the $17,250 resistance might call for a move towards the $17,500 resistance. The next major resistance is near $18,000, above which the price climbs towards the $18,450 resistance zone.
Yeah, I definitely think in terms of the dollar, I mean, that's where the ultimate outcome is, right? So you have a couple negatives working against the dollar. Number one is the Fed is now going to more of a no raise policy. So we know when the Fed was raising rates, it was strengthening the dollar massively. As soon as they kind of toned it down a little bit, we saw the dollar pull back. Now, eventually they'll print money, but that's going to be years away, right? They're going to hold out as long as they can until the economy demands it because it's in such bad shape. But I think the other factors we have to remember with the dollar is that you also have other countries starting to look to take over that reserve currency as well. Mm-hmm. And if the reserve currency starts to be, let's say in digital yuan or something else, there's a whole lot of dollars that countries around the globe hold, and we're talking trillions of dollars that they can then dump on the open market, which will also add to that negativity or downward move on the US dollar. So I do think that, again, the dollar eventually is dethroned. It's one of the reasons why eventually I do think crypto, or at least Bitcoin, becomes intriguing as a store of safety, at least a digital gold to kind of offset the dollar decline. But yeah, I mean, it's going to be the next 5 to 10 years is going to be unbelievably fascinating and kind of scary, frankly.
Mm-hmm.
If Bitcoin fails to clear the $17,200 resistance, there could be a fresh drop. An immediate support on the downside is near the $16,700 level and the channel trend line.
Yeah, so I am in that camp where I do think we see some pretty dramatic downside in 2023. So just showing my SPY chart, one of the coolest things, again, talking about trend lines here, this is the all-time high on the S&P. Here's the first hit of that line. Then you hit it here, and you gapped above it when we got that CPI number last week, and then we sold off. And what I love about that is it's such a negative signal. When a chart opens above a technical resistance point, it has every chance to break out. And if it doesn't, that's like a double negative. That's about as bad as you can get. And we saw that reversal on the back of that CPI number. We then had the Federal Reserve the next day, and obviously the continued sell-off that we're seeing here. So that was the negative aspect here, where I think short term, this has to be looked at as a major top. The next step is to say, okay, well, what happens in 2023? So you have to start thinking that we will see an official recession on the books. How does that affect earnings growth if the consumer really starts pulling back? I don't think that stocks have factored in the lower earnings growth or the negative earnings growth that they could see. And then you have to start to say, okay, well, if the Fed is not going to bail us out from a recession, how bad could the markets take that? And in the very least, I would not be shocked to see this long-term trend line here going back to 2016. And you could even extend this. I mean, this is what's amazing about it. We could extend this back to basically 2009. And that's kind of my target for 2023. So we're looking at about 800 points on the S&P to the downside, or maybe just a little bit less, 75, 80 points. In this case of the SPY, which I'm looking at, that's about 74, 75 points. But it's a big percentage move. I mean, you're talking, 20% probably at least.
Overall, Bitcoin's possible triggers for a price rally will likely emerge from the general crypto market trajectory and influence from the bulls. At the same time, macroeconomic factors remain essential, especially if inflation slows further and the Federal Reserve loosens its monetary policy. So what are your thoughts about Bitcoin's $9,000 bottom as per Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.